Okay, so now I'm live. So why don't you try again? Yeah, click on join call again. New what? Well, I don't know. Try to click on the yeah.
Let's see. Let me try clicking on one of your pictures.
Okay. Because what I'm doing right now is I'm sharing my screen with you. So if it's working, then you should see, you know, a stock chart.
Yeah.
Let's see. Get started by calling or messaging your friend below. So why don't you do video? Did you click on video call in the middle? That video.
I tried that. Let me try that again.
Okay.
It says, sorry, we encountered a problem joining this video call.
What about phone call?
Let's try that. So on the left, it's that new conversation, and then the other one's video call from me.
So can you click on either of those? Oh, there we go.
Yep. Can I put the phone down?
Okay. You can hear me?
Yeah, I can hear you.
Okay, awesome. So what did you do? What did you have to click?
Oh shit! What did I click? I think I just clicked video call again.
Okay. What was it? Was it in that? Was it in the right section?
Yeah,
you know,
right.
It was on the right.
Yeah.
Okay. Click. Okay. Cool. So now I know for next time.
Yeah, I think that's the one you got to click on the right.
Gotcha. Okay. Now you can see the screen and everything, right?
Yep.
Okay. Cool. All right. So, did you have any questions for me first? I always want to, you know, kind of get your questions answered first.
I went on that TradingView briefly.
Uh-huh.
And I didn't spend too much time on it. I just didn't really know how to navigate too much.
Okay.
But like if you day trade, can you buy and sell Bitcoin? Like, right? Can you sell and then wait for another setup to get back in?
Oh yeah. Yeah, you can. And I take it you're using GDAX, right? You're planning on using GDAX?
So what exchange can I trade on?
You can trade on any exchange, but I would recommend, for now, I would recommend using GDAX, and the reason is because when you trade Bitcoin like that on, you know, like Bittrex or Binance, you have to use USDT instead of, because those exchanges don't use US dollars. They don't use, like, you know, fiat currency.
So GDAX goes to cash.
GDAX goes to cash. Right.
That's Coinbase does not. Well, but GDAX is part of Coinbase.
Correct. So GDAX is owned by Coinbase, and it allows you, because it's so kind of backed by the FDIC and all that stuff. You know, they basically signed up to have like insurance. If your stuff gets hacked, they'll replace it, right, and all that. And because of that, they have all these rules of, like, when you sign up, you have to give your social security number and like all this stuff, right? Remember doing that? I guarantee you had to do it.
I probably had to do it. Yeah, I just did.
Yeah. So, you know, because of all that, they're able to offer fiat, and also because they're so simple, right? They only have 4 currencies on there, so they don't have to worry about, you know, managing all these different currency pairs and all that. So they can kind of focus on being a fiat gateway for cryptocurrencies. So that makes it really easy for us, you know, as straight Bitcoin or straight Ethereum or Litecoin traders, to go back and forth into fiat. Because, and the reason I say that is because Tether, there's this coin called Tether, and that's what USDT is. When I mentioned earlier, that's the one that that Bittrex and Binance use. Those one, so that coin is supposedly tied to $1. Like each coin is worth $1, right?
Okay.
But supposedly the reason why it can hold that value and that people believe it is because they tell everyone that it's backed, but each coin is backed by $1, when in fact no one really knows if that's true or not.
Mm-hmm.
Because no one ever, they don't allow any auditors to come in and look at their money, you know. And they also, like a few months ago, they had a partnership with the US bank, but then that bank said, we're not going to partner with you anymore for whatever reason, right? And so that's kind of a loss of funding right there. Yet this whole time they've been minting new Tether coins. They're up to 2.2 billion, I think, as of today. And so like the question is, do they really have $2.2 billion in a bank account somewhere that's backing this up? People don't think so.
Okay. So
basically, you know, the point there is that you never know when they're going to get exposed, and then these tethers are just going to be worth nothing. You know, and you don't want to be caught holding them.
Holding the tether.
Exactly. So so I recommend using GDAX for now.
Okay.
Because it's real money and it's US dollars. So in that case, you know, let's say Bitcoin's 10,000 and you buy, you know, one Bitcoin and it goes up to 11,000, right? And let's say you're happy with that profit, you sell your Bitcoin back into US dollars. And then you just have US dollars now in your account. Whenever you want, you can buy back into Bitcoin. It's just like buying a stock almost.
Well, that's cool.
Yeah.
Yeah, because I wasn't sure about that.
Yeah. I mean, in always, like
GDAX the only one that does that?
GDAX is currently the only US based exchange that's worth a damn. That does that.
But their charts aren't that good.
Their charts aren't good. You never want to use their charts. You want to use, you know, TradingView.
Okay.
Yeah. I mean, I showed you the charts last time, right?
Yeah.
Yeah. It's very little capabilities. You know, you can't put, you know, indicators. You only have a certain view, you know, a few bars. That's it. So that's why I recommend TradingView.
Uh-oh.
Any other questions?
No. I'm not sure what indicators. I didn't get a. I just get the free charts. I didn't buy anything yet.
Yeah, that's okay. You can get indicators still with the free charts. You can just only have 3 of them.
Okay.
But that's like good enough to start with, I think. So do you maybe want to start today as like kind of an overview of TradingView? I can show you how to like add indicators and make a watch list and things like that. You want to do that, or do you want to focus on the trading aspect?
Yeah. We can do a little tutorial on TradingView if you want.
Okay. Yeah. So let me just do it real quick, because you said you looked around, and what was your main question with it? What was your main, you know, like, do you have an issue like figuring out how to find certain coins to trade, or certain charts of coins to look at?
I did find because when I initially pulled it up, it didn't look like how you got yours on the right.
Uh-huh. You mean
some
this part?
stock.
This part?
There was stock there. Yeah, that part right there.
Okay. So if you look at the very right, see this kind of toolbar right here? It says tools.
Yeah.
So this is the watch list. This button up top is the watch list. You can click it if you know, and then it goes away, and click it again and it comes back, right? You might not have the same
Okay.
buttons as me because I have the premium, but I have an alerts button too. You can set alerts like price alerts as
Okay.
well. So, you know, you can say like, okay, right now Bitcoin's at 11,600. And you want to know if the price gets to 13,000, right? And so what you do is you set an alert. So like, let me just give an example. So you can right click and add alert. And so basically puts a line right here, right where you clicked. And it's going to play a sound or email you if you choose when it gets
So
to
you
that.
just right clicked right on. You just right clicked right on the screen.
Yeah. So yeah, right click here, and then it gives you a menu. And then the first button, the first line is add alert. And then it even tells you, you know, what value. So 13,400. And then once that opens up, you can adjust the value here. And you can type it in if you want to. So like, let's say 14,000. I'll just type in 14,000. Right, and it says crossing up or crossing down when it's greater than, less than. You can set like different parameters for the alerts.
All right.
So that's a nice feature. So if you create it, see there's a line right here.
Oh,
At
yeah,
14,000.
okay.
And then you can drag it anywhere you want. Like you can set it to 12 and then hit save. And it all, like they all kind of are listed on this alerts tab right here.
All right.
So then if, let's say I want to go back to my watch list, I'll just click that button. Go back to the watch list. Here, I'll make a new watch list. So you do create new list here. Just say Dennis. And now I have a clean list here. And then let's say I want to add Ethereum, right? So you can type in here ETH/BTC or USD or whatever. And so here it is, these are it down here. So I'm going to add the Bittrex one. Actually, this is Tether, Bitcoin Tether, ETH/BTC.
How come some of them got two names, like that one, Bitcoin Tether or Bitcoin Dollar? What is the first one? What does the first one and the second one mean?
So you mean here and here, or like this one and this one?
So like it says like Bitcoin/Tether.
Right.
So you're buying Bitcoin with Tether funds?
Exactly. So you know it. Basically, what's happening here is these are the pairs. Okay, so like generally when you buy altcoins, like you've heard of Cardano, right?
I have heard of Cardano.
So if you want to buy Cardano, you generally can't buy it with US dollars because it's not going to be on Coinbase, right, or GDAX. It's going to be on Binance or Bittrex, and those exchanges require you to buy Bitcoin or Ethereum first before buying other coins. So you need to exchange Bitcoin for Cardano.
Okay.
That's why they have it as a currency pair. So,
right.
So like if you want Cardano is ADA/BTC. I don't know why it's not popping up. Let's see. This is weird. There we go. It's working here. ADA, BTC. There we go. Okay, so see how it pops this up here?
Oh.
So this is the chart for Cardano/BTC, right? And so what this chart represents is a fraction. You remember, a fraction has a numerator, a number on top, and then a denominator, right, on bottom. You know what I mean by that?
So what are you looking at?
So I'm looking at this chart right here. So this is Cardano, right?
That's a bar chart of Cardano.
Yes.
And then you just got the moving averages.
Yeah. So what I was explaining was this chart represents the price of Cardano
Uh-huh.
per coin divided by the price of Bitcoin per coin.
So I'm not sure what that means.
So see these numbers over here on the price basically.
Yeah. Yeah.
So 0.0008, 0.00008, right? So when the price was here at this level, that's the price of one Cardano, which I think is like $50 or something like that right now, divided by the price of Bitcoin.
This screen's kind of small. I want to see if I can blow it up a little bit.
You can blow it up, yeah. You can make it full screen on your end.
Hold on, make it full screen. Where would I do that at?
Let's see. Why don't you put your mouse over the screen that over my screen?
Uh-huh.
Does anything pop up? Any options? Any buttons pop up when you do that?
There is something on top. Let me see. Let me try to right click on there. I don't know what that's doing.
That's the volume. Okay, try to click F11. Did that do anything?
It opened up a little bit.
Why don't you take another picture and send it to me?
I mean, it's okay.
Because it should be able to go full screen.
It's pretty full. I just my eyes aren't that great.
Oh.
Just the font's a little bit small for me.
Oh, the font.
But
Okay.
It's a little bit better.
Yeah, let me see if there's a button that maybe you can push to make it completely full screen.
Oh, how'd that get in there? Thought I took a photo.
There it is. Okay. Yeah, that's pretty big.
Yeah.
I'd say that's opened up all the way. Okay.
Okay. Just the numbers on the right are kind of. I just got to get closer, I guess.
Yeah, you know what? Here, let me do this. Wait. Let's see. That's that better? I just zoomed in a little bit on my end. It's a little bit bigger now, right?
Yeah, it's a little bit bigger.
Okay. So what I was telling you was, here's Cardano's price, okay? 64 cents. See that?
Uh-huh.
So that means right now there's the circulating supply of Cardano is basically 26 billion. So there's 26 billion coins of Cardano in existence right now. That's what that means.
And in totals, there is total 31 available.
Yeah. So the total supply that they have the capability of releasing 6 billion more than are out now. But right now, currently they're just about 26, just under 26 billion that are out and about right now. And each one of those is worth 65 cents.
Hey, that remember that link that guy sent about there's some kind of website where they're these coins. Do you remember seeing that? They're grading these coins on. He sent a message out.
Yeah, the Weiss. Yeah, the Weiss ratings.
Is that available now? Or have you looked at it?
I've looked on it, but I've only looked at the screenshots that people have sent me.
Okay. Because they had Cardano as a B or B minus, and there's not very many that have Bs at all.
Right. Then none have A's, right?
I didn't see any A's, like you said that one time.
Right.
Yeah, nobody had A's.
Yeah, so Cardano is pretty high on his list.
Yeah. 64 cents. I mean, that's I don't know. You hold it?
No, I'm not in Cardano right now, but it is something that I would buy if I had more money to invest.
Yeah, I'm thinking about buying it at 64 cents.
So this is what I don't want you to think of it as the price per coin. Okay, that's the wrong way to be looking at whether something is cheap or not.
Wow.
Okay, so what you want to look at, and the reason for this is because there's so many of them, right? There's 26 billion coins right now, right? Yeah. And let's just say, for example, the whole of Cardano, the whole of Cardano is worth 1 million. Okay, worth $1 million. All the coins put together is worth 1 million, right? This is just for example, hypothetically. Now, Bitcoin, let's say, is also worth 1 million, right? Let's see how many Bitcoins there are in existence. Do you see this?
Yeah.
Yeah. So how many Bitcoin are there?
Almost 17 million.
Right. And the price is 11,500, right?
Yeah.
So if you do 11,500 times 17 million, that's $195 billion, right?
Right.
And that's how much Bitcoin is worth as a whole right now. So if you put all the Bitcoins together in the world, it's worth $195 billion. Right? Okay. And that's called the market cap. Market capitalization. Price times circulating supply. Okay?
Is the higher the market cap, the better?
So the higher the market cap, it's not necessarily better, but it means that people are invested in it, right? There's a lot of people that have money in this. It's the most valuable coin right now, right?
They got the highest cap out of all coins?
Out of all the coins. Bitcoin is the mother of them all right now.
Okay.
And it's the same thing in stocks, okay? And then it might be an easier analogy to use stocks. Like, let's say Apple stock, right? So Apple stock, their market cap is like 400 billion right now, or something really big. And what that market cap is, it's the share price per share times the number of shares in existence. And that's how much Apple's worth, right? Because if you want to buy all of Apple, then you have to pony up that much money to buy it.
Wow.
Does that make sense?
Yeah, it does.
Okay, so now let's go back to Cardano. So Cardano has a $26 billion or 26 billion coin circulating supply. That's way more than Bitcoin, right?
Yeah.
And so that's why the price. And the price is 64 cents, right? So if you do what is it? 25. So basically 26 billion times 0.6486, right? Each one 64.86 cents.
Uh-huh.
You get 16 billion. And that's what this number is here. 16.8 billion, right?
Uh-huh.
And what is that compared to Bitcoin? Much smaller, right?
Yeah.
Because Bitcoin was what, 195 billion?
Yeah.
This was only 16. So less than a tenth of Bitcoin. So that's why this price doesn't matter. This price does not matter in terms of whether it's cheap or not, right? That's a misconception.
Okay.
Just because the price is low doesn't mean it's cheap. You have to look at how much circulating supply there is. Because if there's a ton of coins out there, billions, and even some coins have trillions of coins.
Wow.
Of course, the price is going to be low, right? But it's already worth $16 billion. That's a lot. It's almost 1/10 of what Bitcoin's worth. If you go to the list of all the coins, so Bitcoin's number one, right? 195 billion. Ethereum's number two at 118 billion. And then you got Ripple at 53. Bitcoin Cash at 29. Cardano's number 5, 16.8. Right? So it's already a pretty expensive coin. You have coins that are down here. First of all, there's already 1,494 coins in existence. Different coins, right? And we're only looking at the top 100 here. Let's go to number 200. Number 200 is worth 85 million, right? Which is much, much smaller than Cardano, right? Follow me here?
Yeah.
Yeah, so basically what I'm saying is just because it's 64 cents per coin doesn't mean it's cheap,
Uh-huh.
right? Because as you can see, it's the number 5 coin in terms of how expensive it is. See what I'm saying? It's right here, number 5.
Okay. So when you're buying, what do you look for then? You looking at volume, or you looking at price? You're not looking at price then.
Well, you do look at price. I mean, on the chart, you have to analyze price and volume together. So remember last time I was showing you, the signs of whales, of when whales come in the market?
Yeah.
One of those signs is when price moves a lot and volume is there to back it up, basically. There's enough volume to back it up, right? Did I show you the breakouts?
You did. You showed me like. You mean like a bar signal?
Yeah. So let's say price goes sideways like this for a while, right?
Mm-hmm.
And then when it breaks out of this line, right? Because you can draw a line from the tops, right? So here's a top, here's a top, here's a top. See how they all kind of line up against this line that I drew?
Yeah.
So what I'm doing is I'm drawing a line that connects all the tops, right? And this is called a consolidation zone, or basically a congestion zone where price goes sideways for a while. And that's kind of what you want to look for, right? You want to look for these zones on the chart so that when it does break out of that zone, you know if the breakout is convincing. And when I say convincing, I mean that it breaks out with high volume, right? if you look down here, see this volume corresponding to it breaking out is really big, right?
So are the whales buying there?
Yes. The whales are buying all through this congestion zone. They're buying in small amounts, right? They're buying small amounts every single bar so that when they have enough coins at this low price, they push the price up. And that's why you get.
So all those big volume bars, are they? Is that the public or is that the whales?
Well, it's both, but it's mostly the whales. Most of the buying in the market is done by the whales. Most of the buying and selling. So most of the volume that happens is whale volume. But what happens is, so let's say they break this out, right? They break it out here, right? And see all this increasing volume, right? The volume's going up. It's getting way higher than the previous, like 30, 40 bars, right?
Yeah.
See that? So when you see that at the same time that price is breaking out from one of these lines, then you're basically 9 out of 10 times you're looking at a true breakout. Okay, which means price is going to continue up for a while. You know what I mean by that?
Yep.
You follow?
So what kind of signal was there? Was there any kind of signal, like a bar signal?
Yeah. So the first signal is that it broke out. A breakout is a signal in itself. Okay. So when you're able to connect these lines like this, let's say you don't see any of this on the right side. Okay. This is all you see so far.
Okay.
Right. Let's say it's a present moment and we're on this green bar right here, and you're able to connect these. Basically, because there's a high here, you draw a line, right? This is a resistance line, because to break this level again, because it's come down from this level, to break this level again, it needs volume to break out if it's going to be a true breakout. Okay. Mm-hmm. So now we're seeing this volume go up. See how I just zoomed in a little bit. See how the volume goes up a lot here?
Yeah.
And then keep going. More volume. And then it breaks out like that. See, it just shoots up above the high, right?
Mm-hmm.
So that's a huge signal right there already. Right? That's something that we watch out for all the time. And that's called a breakout. And if you look at the volume here, all this volume here is corresponding to this move, right? And it's big volume compared to what's behind it. So you can generally trust these. It's not going to be a fake move, right? So a lot of times, let's say this happened. Let's say this happened, but the volume was really low, like this volume here. See that?
Yeah.
So if that was the case, then chances are it's going to come back down. Chances are it's going to come back down and come down this way.
In your hands. How's that? That's perfect. You're all done sitting there, but I'm still going to wash you off.
Oliver?
Say that one more time.
So if this breakout right here was corresponding, instead of with this big volume, if it didn't have this kind of big volume with it, it instead had volume like this, like these bars,
What?
then we would probably think that it's a fake breakout.
It's a false breakout?
A false breakout. You follow me? And chances are price will come back down like this.
Okay.
Chances are it wouldn't have gone up, it would come back down.
But it had strong volume, so it went up.
Exactly. Exactly. So you can look, when you're looking at the charts, you can think of volume as effort. So you need effort to push past these lines here, to push past resistance.
Guess what? I have good news. 2 friends showed up for me to babysit,
Okay.
and now you have someone to play with. All right, guys, let's play. Why don't I just grab some
Is that Dora the Explorer in the background?
Wow. I don't know. I got my daughter. She's on the iPad right here.
Oh, I figured. That's cute. Okay. So, but in this case,
She likes to hang out with me
yeah, that's good. That's good. You have a buddy all the time.
all the time. Yeah. Can't go anywhere.
That's all right. Keeps you out of trouble.
Yep.
So as you can
Keeps me
see,
young.
yeah, it keeps you young. There you go. She probably teaches you all the new games that are coming out on the iPad and stuff. Okay. So in this case,
Put the volume lower a little bit. Put the volume a little bit lower.
she's like higher.
Yeah. Oh, for me.
Yeah. Okay. So as you can see here, the volume is high, right?
Yeah.
So price continued up, right? So one thing we could have done, right, is we saw this breakout. Okay. So that's already a signal of strength because it's chances are it's the whales that broke this out. Okay. Follow?
Yeah, I got you.
Okay. So then what you could do is generally when there's big volume like this and a breakout, chances are it's going to test the line again, right? It's going to retest this area. So you can set a buy order for like a little bit above the breakout zone, right? So the breakout zone is this bar, right? Is this line.
Yeah.
You could have set a buy order right around here at 3,000.
On that green bar?
No. So at this level, right? At this price level.
Okay.
Because, I would say 4 out of 5 times it comes back to retest. So after it breaks out above, after it comes up like this, chances are it's going to test back down. And in this case, it did, right? It came all the way back down to the line, right? On this bar before going back up. So you basically, instead of buying right here where it closed, you saved yourself 10%. Do you know what I mean?
So that's 10% from the high?
So see this little pointy thing that goes out to the right?
Yeah.
That's where the bar closes, right? So this is a 4-hour bar. So within this bar is 4 hours, right?
Uh-huh.
And where it closed is right here at 3,588 satoshis, right? So 0.00003599 or 3588, right?
Right.
So generally you want to, you could have, let's say you bought here or you bought here, right? That's not the best entry you could have gotten because if you just waited for it to come test back to the bar or a little bit above it. So let's say you put your automatic buy order right here, okay? At 3,336 satoshis instead of buying at the close, right? Of this bar. You're basically making another 8%, right? That difference from here to there is 8%. Follow me there?
Not quite. So you would have put a buy in before that red bar?
Yeah, I'd say so. I mean, yeah. Let's say you see price coming up all the way up here, right? On big volume. And it's about, let's say this bar is about to close, right? The 4 hours of this bar is about to be over. And you're pretty sure that it's going to stay up here during this bar, right? The price is going to stay here above this original breakout line, right?
Right.
So what you can do is you think, you're an experienced trader now, and you say, okay, well, I'm pretty sure price is going to come back down to test this line again. Why don't I set an automatic buy order a few percentage points above that line, just in case it doesn't touch it, right? But it's probably going to get close to it, right? So I'm going to set my buy order right here.
Okay.
Let's say you're a high roller and you have $100,000 that you want to put into this coin right now, right? So instead of buying here, let's say you were thinking to buy up here at the top of this bar, right? When the price was all the way up here. You got really eager and excited, right? Or let me put it this way. You have a newbie trading buddy, right? One of your friends is just getting into trading, and he's rich. He's got $100,000, and he gets excited about this breakout, right? And he buys here at this level, 3,916 Satoshis, right?
What are Satoshis?
So a Satoshi is 0.00000001 of a Bitcoin.
Okay.
And so, we basically measure altcoins in Satoshis because you basically have to trade them with Bitcoins, right?
How do you, is there a chart where a conversion chart for Bitcoin to US dollar? Or how do you figure that out?
Yeah, there is. So BTC USD, right? So this chart right here is Bitcoin to dollar.
Okay.
So 11,580, right? But notice the denominator, this is US dollars, right?
Right.
So that means the numerator on top, like when you look at a fraction, it's like 1/4, right? Let's say 1/4. 1/4 is the same thing as 25%, right?
Right.
So the way the fraction works is you have 1 on top, and then you have a slash, and then you have 4 on the bottom. And so 1 divided by 4, basically. 1 divided by 4 is 0.25, right?
Right.
And that's 25%. Same with 1/2 is 1 divided by 2, and that's 0.5, right? 0.5 is 1/2, right? 50%. So the same thing with these pairs. Bitcoin is on top. Bitcoin's $11,600, and $1 is on the bottom. So when you have 11,600 divided by 1, you get 11,600, right?
Right.
So that's why this is 11,600. Now, if you go back to Cardano, you have Cardano on top, and Cardano is 0.64, right? Because it's 64 cents. And then you have Bitcoin on the bottom, which is 11,600, right?
Right.
So basically, if you do that math, 0.648 divided by 11,600. Well, it's basically point. So this is, I don't know if you know what this means, but this means basically 4 zeros in front, or 5 zeros in front. So notice that this says 5586, right?
Right.
And this is 5318. So I didn't do the exact numbers, right, when I did the calculation, but it's kind of around the same, right?
Right.
So that's basically how you do the calculation. So you take what Cardano is worth in US dollars, divide that by what Bitcoin's worth in US dollars, and you have this number over here, the price.
Okay.
So that's how you get this price. Does that make sense? So let's get back to the signal, because this was important. So what I was telling you before is your buddy's a high roller with 100 grand, right? And he's about to throw it into Cardano.
Uh-huh.
And he's buying it up here at this level because what he saw this happen, and he knows about breakouts, right? He knows that if you're breaking past this line here, and it's on volume, then chances are it's going to go higher, right?
Right.
So he gets excited and he buys it right here at this top, okay? That level.
Mm-hmm.
Now, you're telling him, okay, don't buy there because you're experienced now. You say, don't buy there. You should wait till it retests the line first, right? And so you're telling him to buy down here instead, right?
Yep.
And so see this number right here, this percentage, 15%, right?
Right.
That means the difference between where he
The
bought.
high of that bar.
Huh? Yeah, the high of that bar, which is where your buddy bought, and then from where you told him to buy, which is down here, is 15%. Okay?
Okay.
So now, how much is 15% of $100,000?
15,000.
Yeah. See how much money that is?
Yeah.
See the difference?
Yep.
So that's why you want to be patient and you want to wait for that pullback before you buy, because it makes that big of a difference. You could have had an extra $15,000 if you waited. If you waited another 2 hours.
Yeah.
Right. So, and then let me show you the difference when you. So let's say he bought where he bought, right, and he sold at the very top. He would have made 134%, right?
Mm-hmm.
So that means if he bought $100,000 worth, let's see, basically 5 days later, he would have made an extra $134,000.
Wow.
But if he had bought where you told him to buy, because I'm going to drag it down to there, he would have made $178,000.
Okay.
See how much of a difference that little bit of waiting makes?
Yeah.
So when you see a breakout, okay, of that with volume, you generally want to wait a little bit for it to pull back before you buy.
Okay.
Because it can make that big of a difference. That was basically 44% difference, right? And 44% of $100,000 is $44,000.
So on a breakout, just always wait till it tests the resistance support line.
Right. And I'll tell you that that's not a science. It's not a science. It's more of an art. Okay. So when I say, wait for the retest, I don't mean it's always going to touch that breakout. It's not always,
Right.
not always going to touch that. Sometimes it might just get close to it. Right.
Right. Probably most of the time it just gets close to it.
Right. Or sometimes it breaks below it again temporarily, so you can get it even lower. Just depends on the situation. Different situations call for different fake outs and breakouts and all this stuff, right? Because it's not just always one whale behind every single coin. There's multiple whales controlling multiple coins. Man, you're tired.
Well, my day starts remember, I get up at 2:30 in the morning.
Yeah. Man. Yeah, so
But
you must be really tired, huh?
I've been playing pool um, Thursday, and I've been getting home late, like about 11:30, and I get up at 2:30. That's 3 nights in a row.
3 nights in a row of getting home at 11:30 p.m. and then sleep.
Well, Thursday night, Friday night, and then last night we actually got beat about. Well, I left. I played the first match. I left about, I don't know, it was after 9, and I wasn't going to wait till they got finished. I was worn out, so I just came home.
Yeah.
And, had some dinner, went to bed.
Nice.
I got a little bit more sleep, but wasn't much.
Yeah,
But
man. You're not working
rough-
tomorrow, though, right? You get to sleep in tomorrow.
No, I don't get to sleep in tomorrow.
Oh,
But
no.
I don't have to get up till 6:45.
Oh, okay, so it's still early for you then. It's still early tonight.
Yeah, because I got to take my granddaughter to school, and then I'm going to the shop tomorrow all day.
Okay.
So,
Okay. So hopefully you can follow. Hopefully you're not too tired to follow some of this stuff.
no, it's kind of basics to kind of remember, because I haven't really traded in a long time.
Yeah. Yeah, it's going to take some shaking off the rust, but you'll get back. But is this stuff that I'm saying making sense to you?
Yeah, that's the break. I mean, I think before I was kind of over trading, so I was losing money,
Uh-huh.
and I wasn't waiting for something that's breaking out and with volume and just following the trend, and then just get out when it's done.
Right, but then when do you get out when it's done, right?
Yeah, that's
it's
that's another thing you got to look for.
right. And so that'll be part of the education here. Don't worry about it. I'll be teaching you how to do that too.
Okay.
So number one lesson for today was the breakout.
Uh-huh.
Right. So you're going to look for period of congestion here, like sideways movement, right? And here, I'll show you, there's a bunch of different examples. So here, let me get rid of all these drawings. You don't need all this stuff. Okay, so here's an example. See how the price just kind of went sideways for a while?
Yeah.
You can even, open this up and it just went sideways forever, right?
Yep.
Especially here. Then look at this volume. See this volume come in?
Yeah.
Way bigger than anything else, right?
Yep.
That's a sign of whale.
Big whale.
That's a big sign of whale. And let's fast forward a little bit. So right now you can draw a few lines, right? You can kind of connect some highs. So you have this high at the same level, this high, all at around the same level, right? So boom, line right there, right? So this is another thing you want to look out for in practice, is to look for areas where you can put these lines.
Okay.
All right. And here's another one, right? Here's it's smaller, but you have these two lines that touch, right? These two.
Right.
And even this one. So boom, draw another line there. Touch, 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 right?
Yep.
So now when you see big volume like this on a bar that's pretty big compared to what's before it, and it's kind of hitting up against this line, right? See all this big volume here? It's kind of going up around this area of the line.
Right.
You can kind of assume that, okay, maybe someone with a lot of money or a group of people with a lot of money are trying to break through this resistance, right? Because maybe they've bought enough down here now that now they're ready to push the price up and make a crap ton of money, right?
Yep.
So let's fast forward, and then boom, look at that volume. Look at this volume bar.
Wow.
Over almost 700 million of Cardano traded in that 4 hours.
Wow.
But it breaks through both of these lines. See that?
Wow, look at that. Jeez.
And it stays there. It closes up above that line. That's another big thing. It doesn't just have to go up there. And then if it comes back down, that's a really weak signal. That's a signal of future weakness to come. But because it closed up here, see that little line on the side?
Yeah.
That means it closed there. So that's a strong signal. You want to look for those. So now, look at that. And see what happened here? It broke past this top line, right?
Uh-huh.
And what happened? It went below it a little bit, right? See how it kind of just went below it? So you could have bought down here. But generally, you want to buy above the line, right? Above the resistance line. So let's say you pick it up here.
Uh-huh.
Boom. Look at that.
Wow.
It just dwarfs whatever was down here, right?
What was the date on that?
This was the 27th of November.
I think one of the guys at work was telling me that he was in Cardano and it shot up to like $1 or something like that. That must have been the one right there.
Yeah, that must have been it. Well, actually, I don't know, because this was relatively long time ago. But so you think this is a big move, right? And then we're going. Here's another sideways action, right? And then we get more volume coming. Price goes up. Boom. More.
Oh, wow.
And then we get to the area that we were looking at. Boom. Even more.
Wow.
Keeps going. And now it's back down here. It's going sideways again, right? This is present day. This is today.
So it's almost time for a little breakout somewhere, either up or down.
Right. And so we can start drawing lines, right? So you have these tops, right? See how these all touch? This one touches it too. So draw a line. And then I'd also draw a line here at this high. And then here at this high. So you have these 3 lines now where if it breaks above here, let's say you get a big bar like that. Right, like that. I'll even make it green, so see. Boom, right? And then you see volume that's like this big, right? Like that. Then you can believe it.
And just wait for it to come back down and touch that.
Yeah, you put your
line in there.
Yeah, you put your order like here or something, right? You don't always want to chance it, because what if it doesn't come all the way down? Let's say you put your order here on this line, but it doesn't come down there and it barely misses it, and then it starts going up again. You don't want to risk not getting it, right?
Right.
But chances are it's at least going to come down to like here. So let's say you put your buy order right here, right there, and it comes back down and hits it. And then who knows? Maybe it can go up to all the way up, all the way up here.
Here's what she is this time. There we go with her little pad on. How fancy does she look? Super fancy. Whoa, there's like a pink one right here. Little hot pink one. And there's a mini Winnie blind bag in here. You said a blind bag?
So you're looking at this for a breakout?
Yeah. I mean, it's about that time, right? The entire market has been held down for so long. Everything's been not doing much.
Right.
If you look at most of the altcoins, they're doing exactly this. Cardano might look a little bit better, actually. Cardano's really kind of holding steady in this sideways formation here. That's a good sign.
Yeah, but Bitcoin and Ethereum, they've taken a little pop lately.
Right. Those have, yeah.
I actually bought a little bit of Bitcoin the other day, but it's still pending. But when I click to buy, do I get it at that price, or do I get it at whenever that money goes through?
Whenever the money goes through.
Really, and that's the price I'll get it at, or when
Well, no.
I'll get it at the initial buy, right?
So you'll. Okay, so
Because I put it in when it was like about 10,200, right in there.
What did you put in? You put in Bitcoin in your wallet?
Yeah, I put on Coinbase. I bought when I bought Bitcoin when it was at 10,200.
You bought it when it was at 10,200.
Yeah.
Okay, so then that means you own it. That means you have it already.
But the transaction is still pending.
That's weird.
I think when it comes out of your checking account, because you got like.
Oh, okay. So I see what you're saying. So, yeah. It's gonna take, if you're coming out of your checking account, it's gonna take like 7 days.
Yeah, hopefully by tomorrow. But
yeah, it's usually like they say 3 to 5 business days.
I should sell my. Well, can I? Okay, when I buy something else, do I have to sell Bitcoin first?
No.
It'll just take it straight from the Bitcoin, wherever.
Right. So let's say you're in GDAX, right, or Coinbase, and you want to buy Ethereum, right?
Okay.
You would buy it with your Bitcoin. You wouldn't have to sell Bitcoin for dollars and then buy Ethereum with dollars. You could just buy it straight with Bitcoin.
Okay. So if I buy Cardano, if Cardano breaks out and I want to buy it, I would just do Cardano / Bitcoin.
Yes. But they don't have that on GDAX.
They don't?
No. That's Bittrex, Binance. You have to sign up for, I would sign up for Binance. If you can.
I do have Binance.
Yeah, so if you have Binance, then what you would do is, if you want to buy Cardano, you would transfer your Bitcoins or Ethereum or whatever from your GDAX wallet to your Binance wallet.
Okay.
And I can show you how to do that.
All right.
And you want me to show you that later?
Yeah, you can show me that later.
Okay. How we doing? Are you able to? You getting tired or what?
No, I'm hanging in there. So what time is it?
It's about 9:30.
Okay. So we only been on what, about an hour or so?
Yeah, it's been about an hour.
Okay. I know you got to work tomorrow, and I should be getting these kids to sleep. So can we go to about 10?
Yeah, that works.
So what kind of indicators you got on the below?
Okay, so basically what I'm using below is called the stochastic. Down here. Here. Yeah. So basically,
you find that. I mean, what does it indicate?
It's basically indicating whether something's overbought or oversold from a price perspective. It doesn't take into account volume, right? Just price.
Okay.
So basically, if price has gone up a lot relative to the last 14 bars, so see how the stochastic starts moving up here, right?
Right.
See how it kind of is in relation to these?
The price, yeah.
So what it's doing is it's like when this green bar comes in, it's taking the average of the last 14 bars. And this bar pushes the average up by this much. So it goes from basically 22 to 40, right?
Uh-huh.
And then as this kind of moves forward, you have another high price, right? Because the price went up. I mean, the price is up here now. So as it stays up here, it's canceling out the last of these, right? Right.
Mhm.
The last one, the first one that's getting counted in that 14 is getting replaced with this one. So as it's moving up, the stochastic value is moving up as well. Once you get past, see all these two green lines, the 80 and the 20, right? The 80-20 lines.
Uh-huh.
When it gets above the 80, that gives you a signal basically that says it's overbought, which means it's likely to come down soon.
Okay.
And vice versa, when it comes down past the 20 line, it means that it's oversold and that likely it's going to go up soon.
Okay.
But you don't know how much it's going to come down and how much it's going to go up, right?
All right, yeah.
So it's more of like, it's kind of like a mean reversion, you know, sort of indicator. So
So it always averages out the last 14 bars, huh?
yeah, it's whatever you set it to. So here I have it set to 14.
Okay.
And then the average line, so there's two lines, right? The red line is 14, and then the average line takes the average 3. It just kind of it's what it is, it's a slower moving line. But I don't really use it anymore. I think the method that I'm going to teach you of looking at the relationship between price and volume is much more powerful. But I just kind of have it here because I used to use it a lot, and it's kind of comforting to have there.
Yeah. Yeah, it does follow price pretty close.
Yeah, I mean, it's supposed to follow price pretty close, you know, because it
So and then the overbought highs and the
right. See how it's overbought here, and then it starts coming down,
yeah.
and then it's oversold here, and eventually starts coming up. It's overbought here, and it starts coming down.
Yep.
But that's not always the case. It's not always predictive.
Well, you're not using it too much more, but did you consider when it crosses over what are the 3 and the 3? What does that indicate?
So the 3 and the 3 are how the white line is calculated. So if I remember correctly, the 3 is taking the average, the last 3 bars of the red line. So basically, let's say you're looking at this value, right, of the stochastic, it's 25, right?
Okay.
This one's 25 as well. And then this one is 45. Okay. So if you add those 3 together and then you divide it by 3, that's what this line is going to be. So 31.
Okay.
That's basically, so, and if you take the average of the last 3 of the red line, that means it's going to be a smaller number, right? It's going to be basically it smooths the line. They call it a smoothing effect. So notice how the red line kind of like zigzags and stuff,
Right.
whereas the white line is like kind of just very calm.
Mm-hmm.
That's because you're taking the average of the red line, the last 3 values of the red line. So a lot of people think that, let's say you're overbought, right, up above 80, and then when the red line crosses down below the white line is when you should sell.
Okay.
And vice versa, when the red line crosses above the white line down here is when you should buy.
We'll be in touch.
So the red line's kind of like a faster line, I would say, I think.
Yeah. Yes, exactly.
Your pajamas.
Go to it in my bed.
Yeah.
Okay.
So So that's the stochastic. It can be very useful, and I will teach you a couple more tricks of the stochastic that are, I think, a little more accurate than just looking at overbought and oversold.
Okay.
One of those is called a stochastic divergence. Okay. So if you notice here, if I zoom in, notice that price comes down like this, right? It hits a low of this level,
Right.
and starts going up, right? And notice the stochastic comes all the way down to here, right? To the 6th level, right?
Where you at? Oh, okay.
Down here. So see how it says it's about 6, 8, about 8 or 10. So
Yeah.
now, if you look at this low here, and then you look at this low, it's a little. This one's a little bit lower, right? Tiny bit lower.
Yeah.
But the stochastic level is higher. It's at 24.
Mm-hmm.
So right. So you have a higher price and a lower price, but you have a lower stochastic and a higher stochastic, right?
Right.
That's called the stochastic divergence. So that the price and the stochastic value are diverging. They're going opposite directions.
So that's pretty powerful.
Right. So when you see that, 9 out of 10 times it's gonna eventually go up. Okay. So as you can see here, it went up like that. And so you can look for those. You can trade off of those if you want. It doesn't. What it doesn't tell you is how far it's going to go up. Right. But you can kind of, once you get more experience, like, okay, maybe it'll go up to this resistance line, right? And I'll sell here or whatever. However you want to do that. So that's my favorite way to use the stochastic, is to find a divergence.
So when the price is going down, but the
Stochastic is going up.
yes is going up.
And you want to look at like lows, right? So like, see the stochastic comes down and makes a dip, right?
Uh-huh.
And then it makes another dip. You're looking at those dips. Where was the low of this dip compared to this dip? If the second dip is higher than the first dip, and then you're looking at the price, and with the price, the first dip is higher than the second dip, right? You get an opposite, right? The stochastic and price are doing opposite things.
Okay.
Because the first one's low and the second one's high. The first one's high and the second one's low, right?
Yeah, I see that.
So then what's going to happen is price is going to want to correct so that the stochastics match up again. It's kind of a cool little trick.
Yeah, something to look for.
Yeah, so I mean, we can find another example. Let's see. Okay, here's one, right? So you have stochastic down here at 17 or at 12, 11, right?
Okay.
And see, during this dip, where's price, right? It's up here, right?
Right.
Then you have this stochastic, which is at 21, but price is lower now, right?
Let me see.
So you have this price and you have this price, right? So the first one's higher,
Right.
the second one, right? But look at this stochastic. The first one's low all the way down here. The next one is a little bit higher. See that?
Yeah.
And then price goes up. Went up big this time.
You could probably find a lot of those on just like a shorter time interval.
Right. Yeah. So let's maybe look at the 15-minute.
There's one right there, but but you can't play it down yet, huh?
Right.
Right there at I guess it would be like 12 o'clock.
Here?
Yeah. It's the Scholastic's going up, but the coin's going down. Right there.
Right here?
Yeah. Well, actually, no. I guess it is kind of following it.
Right. So what you want to see, what you want to compare is not just price to what the stochastic's doing, right? You want to compare one dip of the stochastic to the next dip in the stochastic. Right? So here, let me find one for you. Okay, for example, right here. So see how you have two dips, right?
Mm-hmm.
One dip and then another dip. This one's lower and this one's higher, right?
Yeah.
See that? But the corresponding price, this price is higher and this one's lower, right? And then look what happens. You get a price pop right here. Afterwards. Comes up to here, right? Before coming back down. So, like I said, you don't know how much it's going to pop up, right? But even this.
The left, that left little dip is still higher than the right dip, but Scholastics is kind of going up and price is kind of going down. That's what you mean, right?
That's exactly. So the first dip in stochastic is lower than the second dip in stochastic. If you look at the corresponding prices, the first dip in the price is higher than the second dip in the price, right? See how it's opposite?
Yeah.
It's opposite of the stochastic. That's what you want to look for.
Okay. I like that one. I had read that before, but I never went. I never really got deep on that, but I've heard of that.
The term, yeah.
In divergence.
Right. That's
a pretty good, powerful move just for like a real short term.
Yeah, I mean, let's say you sold, right here, and you just made 1.6%, right? Let's say you're trading with $100,000 again. That example. You just made $1,600. Or if you're trading with $10,000, you made $162.
There you go.
Yeah. So, if you find these things, if you find these signals, and you don't need that much money, right? Let's say you're trading with $10,000, right? You're making that money in 15.
Yeah, beats working.
It's not that much time, right? So, and this is just the beginning, okay? These signals that I'm telling you about, they're very kind of rudimentary, okay? The real power is in reading the price and the volume together. And I think the next time, we'll meet up in person.
Okay.
And then I'll show you, that way I can point to things with my finger, and kind of explain to you a little bit better. And I'll show you, I think, let's see, I'm thinking our next meeting, we should go over, since we went over breakouts this time, I'm going to show you how to better draw those lines, those resistance lines.
Okay. Charting,
yeah. Basically finding points of resistance, whether they're horizontal or diagonal. Okay, I think the last time when we met, I showed you, some like drawing lines, right? Like I drew a bunch of lines.
Yeah.
Yeah, and so next time I'm gonna have you practice doing it. right? I'm going to have you point out to me where these lines are. We'll go over it first, and then I'll open up a clean chart for you, and you can start doing them, and then I'll let you know if you're doing it right or not.
Sounds good.
Yeah, and I'm going to stress that if you're going to really do this, repetition is a key. Okay, you got to get in there and practice doing this, drawing these lines over and over and over again, so that when you are trading and you're in the moment, right, price is going up really fast or price is going down really fast, you're able to draw these lines and have them there already, or be able to recognize them as they form, right?
Yeah, you could. I'm sure you can have already lines drawn out on a certain coin that you're looking at, right? And just kind of save it.
Yeah, exactly. It saves automatically on TradingView.
Okay.
And that's really nice because any other charting thing that you're going to use, like let's say Binance has their own exchange, like charting tools.
It's why I haven't really been on them on a regular desktop, but on the phone, you don't get much.
Exactly. And even on the desktop, it doesn't save your lines. You know, you got to redraw them every time. You got to redo the settings every time you log in, which is maddening. Yeah, just use TradingView. Trust me. You'll appreciate it.
You got the premium, huh? How much is the premium?
The premium is, let's see. The premium, remember, like I said, when you sign on for the free trial, around day 14, they give you a 50% off offer.
Oh, did it?
I think it's about $17 or $19 a month.
Okay.
But you have to pay up front for the year.
Okay.
Yeah. So if you're thinking about doing that, I'll send you the link, the referral link.
All right.
You want me to send it to you now?
You can if you want, or whenever, because I just signed on. Well, God, it's probably been.
You signed on for what?
4 or 5 days ago, I guess.
Oh, did you sign up for the trial?
Yeah, I was signed up for the trial.
Oh, okay. Yeah, so see if they give you that half off offer. Let's see. Or
okay.
Let me write that down. Let me write down that I need to send you that link.
Yeah, you had mentioned it before, but I think you forgot to send it to me.
Okay. Yeah, I think I did. Send link. Yeah, and then I think what I'm going to start doing is I'm going to also keep in my notebook, everything we talked about during the session. Because, I have like 4 students now, 5 students actually. So it's kind of hard, like, to remember what I talked about with the last person and then coming back to you and, seeing what we talked about. So I'm going to keep track of the topics that we talked about. That way, next time I know what we've gone over already, and then we can move on to the next. So to kind of recap, today we talked about points of resistance, right? We talked about a consolidation zone, right? Sideways action. Like this, or like this. Sideways action leads to breakouts, either to the upside or to the downside. Okay, so this could have drawn another line down here, right? And it could have broken down to the downside, right? But instead, it broke out to the upside with volume. Volume here. And then we can trust it because, it's generally the whales behind all that volume, right? And we also talked about waiting instead of buying up here to wait till it gets closer to the line that it broke out from, because you get a better deal that way. Right. So those are 3 very good concepts. And these are things that if you have time and you just, you should practice this. Okay. So you should look around on different charts, right? Maybe make a little watch list of 10 coins that you want to look at, right? And just go through the charts on hourly, like click the 1 hour up here and go through and just look for these areas where price just goes sideways for a while, or even not just sideways, but it comes up and it touches, like here, like here's one top, comes back and it touches this area again. So if you see two tops, 1 and 2, kind of around the same price level,
Right.
draw a line there. See how it stops there again later in the future?
Mm-hmm.
And then it breaks through it. These are all important levels. And so the more you practice drawing these lines, the more automatic it will be for you to see when you're trading.
Okay.
And you want that automatic kind of reaction for yourself.
When you put a buy order and it fills, do you put a stop right away? Because we need to talk about that too.
Yeah, so
You're doing trading.
it depends on what I'm trading. For me personally, I used to use automatic stops for altcoins, but because of the dynamics of the market for altcoins, it makes it a little difficult to set your stop correctly. And what I mean by that is because you're buying altcoins with Bitcoin, you have to, when Bitcoin goes up, let's say Bitcoin goes up, right? 10%. Okay. It's going to cause that altcoin to go down 10% because every coin that you're basically, every altcoin, not every altcoin, but most altcoins, you're going to be buying with Bitcoin, right?
So you're going to be, that's also kind of controversial because selling your Bitcoin high, but aren't you kind of also buying the altcoin kind of high?
Well, what happens?
What I'm trying to say is it an even exchange? Is it? Are you losing out or what?
No. I mean,
Instead of just buying from cash.
Instead
So
of
are you
just
going
buying
to
cash.
are you going to be missing out on the upside on the Bitcoin to buy an altcoin?
Yeah, but the whole point of buying an altcoin is because you think it's going to eventually go up faster than Bitcoin, right? Let's say you're comparing two coins. Okay, let's say you buy one Bitcoin and it goes up 10% in 1 month, right? You made 10% in 1 month. But let's say you buy an altcoin and that altcoin goes up 20 times in a month. 20 times. That means you made 300%. You made 2,000%, 3,000% compared to the 10%, right? Because altcoins have much more upside to them because they're so small. Bitcoin's already huge.
Cash and GDAX?
Yeah.
You can have cash here ready to go if you want.
Right.
Okay.
Right. So I mean, what I would recommend is like, how much do you want to trade? How many dollars do you want to put at risk?
I don't know. I just thought of that, but I'm not sure since I'm kind of testing out the crypto trading. I'm not sure.
Well, how much money can you afford to lose? You know, is what I'm saying. Like, how much money do you want to put into to trading?
Well, I think I got in there, 1,000 right now. But I'm holding BitTrick. I'm holding Ripple, and I bought it at 1,600, but I bought it kind of high.
Mm-hmm.
So I think I got around 4,000, 4,500 somewhere in there. So I could afford to lose that.
So 4,500.
So I should probably put it all in Bitcoin right now and get ready to trade.
Yeah. So you know what I would recommend trading first, especially when you're getting your feet wet, is Bitcoin itself.
Just Bitcoin?
Yeah. And the reason I say that is because other altcoins are so affected by what Bitcoin does.
Right.
So if Bitcoin goes up, altcoins will go down. If Bitcoin goes down, altcoins go down. You know what I mean?
Oh,
It's like this weird relationship, okay, that, you know, it's a little complex, but I'll explain it to you. You know, I'll explain it to you eventually. But Bitcoin is just Bitcoin. It's not affected by anything, you know? None of the altcoins really affects Bitcoin, right?
okay.
Bitcoin is the mother of all coins. And so it's easier to manage. And the fact that
Hey, are you doing any mining?
No, I'm not.
You think it's too early to get into it, or what do you think about that?
Mining takes a lot of money to get started.
Yeah, it does.
You know, you gotta invest at least like $10,000 to get a good mining setup.
Plus, the graphic cards are expensive, and they're going up because of maybe. I mean, they've gone up like I've checked them out. They're like shit, 30%.
Yeah, they're going for what, like over 1,000 now, right?
I went online just to Fry's, and it was like, yeah, you might as well call it 1,000 with taxes and everything.
Mm-hmm. Yeah, the ones that are the best, right?
For like so you can get a lesser one, like a 580 or a 480. And
Yeah, but then you're not getting much, you know, when you're mining. You gotta stick with the best stuff. Because everyone else is getting the best stuff.
Yeah.
Yeah. So yeah, I haven't gone into mining. One of my other students, James, actually is getting a group together, and they're talking about all pooling their money together to mine.
Yeah, there's a couple guys that we talk trading together.
Uh-huh.
They're the ones that got me into it. I don't know if you remember, I told you, but they got me into it, and they want me to go in their group, but they want me to do it here at my house because I got solar on top of my roof. So that would help out with
Electricity.
If we pulled our money together and got like about 10 cards and started that way, and that would probably be about maybe a little over 10,000.
Right, and it would probably take around 8 months for you to recover your initial investment. That's what James told me.
Got a little thing going right now. It's not that big, but it's in an apartment, and they own the whole complex. One time they didn't know what to do.
Wait, the whole complex? What happened?
It went down. The power.
Oh, no kidding.
Yeah, because I think they had everything on one circuit. I think so. I think it overloaded
That's crazy.
Yeah, and they overloaded it, and it went down.
Wow.
But I got my son-in-law. He's an electrician. So he might be able to rig something up over here. So I'm thinking about it. I mean, my initial investment would probably be about 3,500 each.
Yeah,
We could probably make over, like that guy said, he's probably right on the money, about $8, because I think we could make about 12. Well, maybe closer to 14 or 1,500 a month, like a $12,000 investment, 11,000.
that's not bad, huh?
That guy's probably right on with his prediction.
Yeah, so that means, you know, every year after that, you'd be making what, like, well, okay, so here's the thing about mining is that every number of blocks, like, so right now, let's say we're at 1 million Ethereum blocks mined, right?
Mm-hmm.
When it gets to like 2 million, the difficulty gets twice as hard.
Yeah.
Which means that you'll make half as many coins.
Okay.
So, and basically, you have to buy the most up to date cards the next year, right?
Yeah. Yeah. Well.
So you have to buy new cards like basically every 18 months, because every 18 months, that's Moore's law, right? Moore's law is that every 18 months computing power doubles.
Yeah, that's something to think about too.
Right. So just to keep up with the industry, you know, is pretty expensive too.
Yeah, they throw away graphic cards all the time at the casino. The bench techs, they fix boards. They just kind of like buy new. But I'm wondering if I can close and see if they can be fixed.
There you go. Why don't you just take the old ones?
Take the old ones, yeah.
Are they throwing them away because they're broken, or just because they're updating?
Well, we had a whole shitload that we updated, and they just chucked them, man. But most of the time, the fans were just bad. The fans were just bad. Yeah.
So if you replace the fans,
they're working again. Because we used to buy just fans and replace them, replace the fans and throw them back in the games, and they're good to go.
Oh, okay.
But these new ones, these up-to-date ones, they got like 3 fans on them.
Jeez.
So, yeah. But I'm going to look at that out too this next week.
Yeah, let me know what you find out, because that's you know, mining something that's always interested me, you know, but I'm just like, man, I have to fork out so much, and my room's gonna get so hot. Like, where am I gonna keep this? Like, I gotta find
yeah, luckily I got a lot of room here. But yeah, I wish I would have known this. Well, it's been a while. We were throwing out like boxes of that stuff, and we had so much e-waste. We were throwing whole games away. Oh, there was so much. We threw a lot of good stuff away.
Well, hey, now you know.
But then they upgraded all the cards, and they threw everything away.
Wow. Well, how old were the cards?
So, those cards were from 2008.
Oh, well, then they would basically do nothing.
You think?
Yeah, they would do nothing now. I mean, you would need so many of those cards. Like, if you think about,
we had hundreds of them.
Yeah, well, yeah, that maybe would have done something. But these new cards are like so much faster, you know, exponentially faster.
Yeah.
So that's the difference. But hey, it's 10:05. I think I'm gonna wrap it up.
Okay.
I gotta pack because I'm going to Fairfield for the next week.
Okay.
For work, I'm doing an audit about there, so it's gonna be
okay. So I'll practice this. Hook up in another week or so.
Yeah, sounds good.
Have you thrown any new coins out there? I haven't really checked Slacker lately.
No, I told, I sent them this message out. I said, right now the market is kind of in like a iffy spot, right? It could go down more, it could go up. I wanted to wait for it to stabilize before I threw out new coins, because I don't want people to get excited about a coin and then the next day the market takes a dump again. It has nothing to do with the coin itself. But if Bitcoin starts falling again, everything's going to fall, right?
Okay. Okay, I was just wondering about that. If I have any others, what do you prefer if I ask you a question? What?
Oh, just text me.
Text. Okay.
That way I can get to it sooner, because I'll have my phone on me.
Okay. So, do you just log out of this, or do I just close it out, or what?
Yeah, I think you can just. Is there a leave button? I don't know how it is on the other end, but I can just stop my broadcast. But yeah, you probably just close out of it if you're taking off.
Okay, man. Appreciate it.
Yeah, you got it, man. Have a good night. Happy trading.
Okay, thanks.
All right, bye.